So if you're a business owner, you've probably asked yourself this a million times. Should I put my vehicle in my personal name or should it be under the company's name? Most people think this is a simple tax question, but you know what? They're missing the real story. This decision is actually all about protecting your assets. And this is where things get kind of murky. There's this huge myth out there that says to write off any of your vehicle expenses, the title absolutely has to be in your LLC's name. But is that actually true? Well, the short answer, it's a big, fat no. You absolutely do not need the vehicle's title in your LLC's name to claim those business deductions. And honestly, this is one of the biggest, most common misconceptions in the business world. Okay, so if who owns the car doesn't matter for the write-off, then what does? Well, it all boils down to one single core principle that basically governs every business deduction you can take. This is the big secret right here. The tax authorities, they don't really care whose name is on the title. What they care about is how you use the vehicle. As long as an expense is ordinary and necessary for your business, you can deduct it. So if you can prove you used that car for business, you can write off the expenses. Simple as that. All right, so if it's all about use, that brings up the next big question, right? How in the world do you actually calculate these deductions? Well, the good news is you've got two main paths you can go down. You've got two main ways to do this. The first one is super simple, the standard mileage method. You just track your business miles and multiply them by whatever the standard rate is for that year. Easy. The second way is the actual expense method. Now this one's more work. You track everything, gas, insurance, oil changes, new tires, the whole shebang, and then you figure out what percentage of your driving was for business. But here's a little pro tip for you, and it's a big one. Track both. Why would you do that? Because at the end of the year, you get to look at both numbers and just pick the one that saves you more money. It's all about maximizing that deduction. Okay, hold on. If you can get the write-off either way, why does anyone bother putting a vehicle in an LLC? It sounds like a lot of hassle, right? Well, that's because the real reason has almost nothing to do with taxes. It's about strategy and protection. When you title that vehicle in your LLC's name, you're really getting three major advantages. First, and this is the big one, you get that layer of liability protection. Second, it just makes your accounting so much cleaner. And third, it can actually give you a little more personal privacy. Now, this is super important, so listen up. An LLC isn't some magic shield that makes you invincible. If you are the one driving and you cause an accident because you were negligent, guess what? You can still be sued personally. The LLC protects the business. It doesn't protect you from your own actions. Okay, now we're getting into the really cool stuff. If you do own the vehicle through your business, you unlock some seriously powerful tax strategies that can basically put your deductions on hyperdrive. We're talking about Section 179 and bonus depreciation. Just think of these as tax deductions on steroids. For certain vehicles, usually heavier ones, these rules let you write off a massive portion, sometimes even 100% of the vehicle's cost, all in the first year. It's a huge deal. But, of course, there's a catch, and it's a big one. To get your hands on these incredible write-offs, you absolutely have to use that vehicle for business more than 50% of the time. Not 49%, more than 50%. This is where your mileage log becomes your absolute best friend. All right, let's pull all this together. We've busted the big tax myth, we've looked at the real perks. Now it's time to create a simple framework so you can make the right call. Because this decision isn't about taxes, it's about managing risk. So how do you actually choose? It all boils down to one simple strategic question. What are you trying to protect? Is it your personal wealth from a business lawsuit? Or is it your business from something that happens in your personal life? Let's break this down. Look at the first scenario. Let's say you've got a lot of personal wealth, a nice house, investments, savings, but your business is still pretty small. Your biggest fear? A lawsuit from your business wiping out your personal life? In that case, putting the vehicle in an LLC acts like a firewall to protect your personal stuff. But now flip it. Imagine you don't have many personal assets, but you've built a really valuable business. Here, you might keep the car in your personal name to protect your business from being at risk if there's an accident. You see, at the end of the day, this whole decision isn't about pinching a few pennies on your tax bill. It is a major strategic decision about where your wealth is and how to best protect it. Wow, we have covered a ton of ground here. We started with a simple tax myth and ended up talking about sophisticated wealth protection. So what's the one thing you need to remember from all this? What's your next move? So I want to leave you with this one question to think about. Is your vehicle ownership strategy actually protecting what matters most to you? It's time to stop thinking about the tax deduction and start thinking about what you've worked so hard to build and what you need to do to protect it.